A federal wealth tax has been introduced in the Senate, and here's what affluent families need to know. Several U.S. senators have proposed new legislation in an effort to raise $3 trillion in tax revenue over the next decade. Called the ultra-millionaire tax, this new proposed legislation comes in direct response to the economic turmoil Americans have experienced throughout the COVID-19 pandemic. Senator Elizabeth Warren described the necessity for such revenue, saying, "As Congress develops additional plans to help our economy, the wealth tax should be at the top of the list to help pay for these plans because of the huge amounts of revenue it would generate." The majority of Americans would not see a direct impact from this proposed wealth tax, but for those it would affect, this could greatly increase their tax obligation in the future. If you're concerned, here's what you should know about this potential change. What is being proposed? Several senators proposed the Ultra-Millionaire Tax Act on March 1, 2021. This tax legislation would impact 100,000 households, or those considered to be in the top 0.05% of wealth earners in America. More specifically, the Ultra-Millionaire Tax Act is a wealth tax that would affect those with a net worth of $50 million or more. Affected ultra-high net worth families would be taxed as follows: 2% annual tax for those with a net worth of $50 million to $1 billion, 3% annual tax, 2% plus 1% surtax for those with a net worth of $1 billion or more. So what is a wealth tax? With income tax, the individual is taxed on how much they made during the previous year in taxable income, such as a salary, retirement account withdrawals, interest, etc. Wealth tax, on the other hand, is an annual tax that is applied toward an individual's actual net worth, as opposed to the income earned over that year. Do wealth taxes currently exist? Several states have proposed wealth taxes in the past. In 2020, California introduced a wealth tax for residents and former eligible residents with a net worth of $30 million or more. The proposed legislation, however, has not moved forward. Several states currently have a millionaire tax implemented, which is based on an individual or family's taxable yearly income. So what should ultra-high net worth families do to prepare? Learning that you may be faced with an additional tax burden never feels good. But the reality is, there's no guarantee of when or if this proposed legislation will be passed into law. Those concerned about the potential tax obligation should work with their financial planner or tax professional. Familiarize yourself with the details of the proposed wealth tax, as well as any anti-evasion and avoidance measures proposed. Preparing yourself and your finances ahead of time may help ease potential tax burdens or help you determine how you may be able to lower your tax obligation. If you have any concerns or questions, click the button below, call 1-800-467-8152, or email info@ronaldgeelach.com.